It's my pleasure to provide an update on Strandline Resources at this event. We've been here probably about 4 times over the years, and so I'm pleased to meet quite a few shareholders that have been following our journey over the years, so thank you for your support. It's our first time presenting though, which is really pleasing, where we are, I would say, a real mining company. We are a producer now. After in December last year, we sold our first shipment of heavy mineral concentrate, which contained high value critical minerals of zircon, titanium, and the rare earth mineral called monazite. We did that in December, and we've been selling a shipment ever since. We've just posted our first full quarter of operations, where we've delivered an operating cash flow margin, which is fantastic for the business. We are in ramp-up mode, and we're on this strong earnings trajectory right now, and the journey towards operational excellence. So I look forward to giving you guys a bit of a flavour of the business, how we got to where we are, what we're all about, and of course, what's next. So before I do, we'll just talk where the project that I'm really going to focus on is what we've just brought into production. It's the Coburn Mineral Sands project in Western Australia. We also have a whole series of growth projects down the Tanzanian coastline, and really quite exciting jurisdiction there, with mineral sands down the east coast of Africa being significant producer of supply globally. And really that portfolio that we have is a business in itself, but unfortunately it's not going to get much airplay from me today, because we're going to focus on the main game, which is Coburn, and even the big expansion case for Coburn. A bit of a corporate snapshot. We're mid 400 million market cap. We've got about 51 million cash in bank, Australian dollars. We're pretty well covered from an analyst research point of view, and if you go on our website the last 3 weeks, there's been 3 or 4 reports that have been recently updated. We're currently trading, looks like one of the graphs that Headley was showing for the small caps there. That's a 12-month graph. And even though we've delivered some significant milestones and de-risking milestones by coming into production, delivering the project on time and on budget in quite a crazy environment in WA, I feel that you know, the light bulb's going to go off with investors soon when they start seeing these numbers that we'll be delivering from this asset, let alone the growth optionality in it. When I started in the business, we were a 10 to 12 million market cap about 5-6 years ago, and now we're at that level, and only a fraction of our combined net present value at this point in time. So massive upside for this company and the shareholders that are involved in it, and this is just the start of the journey for the company. I think I'm the only mineral sands presenter, so I'll just talk a little bit about the market. And we are critical minerals. The minerals are used in everyday life, so the demand is not really going anywhere at all. It is largely driven by urbanisation and rising living standards around the world, and global growth drives that as well. And there are a range of new applications, and particularly in electrification and renewable sectors. Future supply is restricted. There's been a significant lack of investment in mineral sands projects in the last decade or so. Aluka, Rio Tinto, and another company called Tronox supply about 70% of mineral sands globally from various regions, but mostly Australia and Africa. And there's been quite a few mine closures. So by coming into production, we're the only project that's come into production, and it's not just any project, it's a massive project. So we're really leveraging that advantage, and pricing for mineral sands across the commodity suite of zircon, titanium, and the rare earths are really, really at high levels right now. Significantly higher than what we studied and what we projected. So look, for the rest of the slides, I'm just going to really start to drill down into the Coburn project. It is strategically located in where Aluka's been operating for 30, 40 years out of the Midwest area. We're north of Geraldton by about 250 kilometres. We drive triple road trains down the Northwest Coastal Highway, and we have berthside storage at Geraldton there, right next to the Aluka facilities at berth 4, and that's where we're shipping out to the global market. As I said, we delivered our first shipment in December, and we've done one January, February, March, April, and I've already got one locked in for the next week or so. So it's game on for us in terms of earnings, cash flow, and production ramp up. So a bit of drone footage by one of our surveyors, mining engineers, which you'll love to know that I'm just showing. We did this about two months ago, so it was early stage of our ramp up. That's the wet concentration plant. That produces the rich heavy mineral concentrate, about $1,100 a tonne we're selling that for, which is about 40% higher than we anticipated. State-of-the-art technology. A lot of the technology in the wet concentration plant is Australian-based, Australian-made. This is the mineral separation plant, so we are value-adding in country here in WA by separating the minerals into their final product streams. We're commissioning this plant right now. We've got a massive solar farm. It powers about 35% of our energy. We get a lot of wind, we get a lot of sun in Coburn, in Shark Bay there. So it's a large open pit mine. We're already doing our rehabilitation, seed collection. We've got a lot of great people at this facility. We've got some stars actually that we're starting to really embed the culture that will take us through to that operational excellence goal that I'm talking about. So as you can see, out of the Geraldton berth there, it's bulk material loading. We benefit from the scale of this asset, and being such a long life asset as well, which I haven't mentioned, it's underpinned by 22.5 years of ore reserves, the Coburn project. It's got another 15 years of mineral resources along strike to the north. We've assessed those as production targets, so it's essentially a 37-year mine. The DFS metrics that we put forward prior to the FID decision back in mid-2020 had demonstrated an EBITDA margin of 55%, an annual EBITDA of over $100 million. Mineral sands pricing, spot pricing is about 40% higher than what we utilised to project our revenue numbers back there. And obviously, OPEX costs have inflated as well, and more than what the normal amount would be that you would study in a base case. But certainly, we're very confident that the revenue line is far outweighs what the operational costs have inflated by through while we've been building it. We built this project. It was $340 million capital investment, the largest mineral sands project being built for many years, and we own this asset 100%, and that's pretty rare to have such a strategic asset, a long life asset owned by a junior mining company 100%. We're a pretty ambitious mob though, and we are already looking, even though we're ramping up, and that's our main focus right now, ramping up that WCP production profile, ramping up the MSP commissioning to produce those final product streams, and we will be doing that for the next 3 to 4 months to what we had projected to be at the end of September quarter. That ramp up will hopefully be starting to transition in a steady state, full nameplate production day in, day out. We are studying an expansion case already. And I didn't actually contemplate that when we were considering this asset, but now that we've been in mining for 4 or 5 months and some serious mining, the ore body's reconciled very well with what our assumptions were, both in grade, the assemblage of the mineral there, the slime content in the deposit, the oversized material in the deposit, just where we thought the mineral was going to be, that's where it was. So that's created a fantastic foundation for us and confidence level to move to bigger and better things with this asset. We have ore that outcrops at surface down the eastern flank of the deposit. It's about 25 kilometres long from north to south, about 3 kilometres wide. It's conventional big dozer push bulk material mining into a dozer mining unit. We draw water from the large aquifer below us. We put the sand into a slurry and we pump it to the wet concentration plant in this case, about 2 to 3 kilometres away from the pits. We have 2 dozer mining units in operation at any one time out of the 3. The third one is on standby or getting moved into its next block position, really refining that sequence of dozer mining units moving into their key, and that's area for us to really get our A game on over these next few months to deliver those nameplate performance through that sequencing. Already, we've been delivering at nameplate levels in terms of throughput. Our recoveries are in line with what we anticipated to be at this point, and the specification of the heavy mineral concentrate on that stockpile is exceptional. So we upgrade the ore from 1 to 2% heavy mineral that's in the ground to a 94, 95, and in fact, the last few weeks we've been doing a 98% heavy mineral concentrate, which is too much. So we've got to relax some of that recovery to just drop that spec down a little bit. The key focus for us in the ramp up is just ensuring that we improve the equipment and plant availability, reduce the downtime that you typically get in commissioning phase, as you expect, enhancing that mine plan sequencing that I was alluding to, and optimising those mineral recoveries to the final products out of the MSP. One of the key things with this deposit is that it's the mineral suite across the zircon and titanium is really of a premium nature in terms of the low impurities and the end markets that it goes into. So the zircon is, and all our products are contracted 100% offtake for the first 5 years of production. So we've pre-sold it all. And the premium zircon is ceramic grade zircon, so really low impurities and heading into the high-end ceramics market in Italy and Spain, to the biggest customers in the world, actually. And our ilmenite and rutile, which is our titanium minerals, are going into American counterparties who are huge in the TiO2 paint pigment sector, so paint, paper, inks, plastics, those things. Titanium also goes into aerospace, and that's had a real kicker since COVID sort of lockdowns, when the aerospace companies are really having to meet the demand of more air transport and so forth. And whatever doesn't efficiently report into those final products will report into a zircon concentrate, which is a catch-all, and that's where our rare earth mineral called monazite reports into. Rarely do you get a sort of revenue and cost profile like this. This is a really homogeneous, large-scale project, and we've even smoothed out that revenue line with our detailed mine planning that we've done. So when we talk about a scale-up project, what we are studying right now, we're talking about adding another dozer mining unit potentially to this, which will be 3 dozer mining units in operation out of the 4. And it's essentially a 50% increase in throughput. So these DFS numbers, 200 to 250 million revenue per annum, and you apply the current spot pricing, about 40% increase to that, and then you apply a 50% upgrade to that, we're talking this is a serious business and significant upside to where we are now, and we're significantly undervalued already. Our funding package is a bit of a differentiator for us. We've managed to attract the Federal Government of Australia as our major lender. They're a really huge enabler in bringing this project into production so effectively. They lent us $130 million, which is at fixed interest. It's over a long tenor, low interest rate. Our first repayment of the principal scheduled repayments is 2028. So that really sets us up for success, to be not burdened by debt repayments of any magnitude early in our project. Gives us a huge grace period, allows us, and particularly equity holders and shareholders, to really benefit early. So you look at the capital growth opportunity in our share price, you combine that with some significant yield potential in this asset with a profile like that. This is pretty exciting for, I know, a lot of long-term shareholders. Look, I've only got a minute to go, and look, what we are, being an engineer myself, originally been involved in major projects forever since I was come out of school. We are a technology and engineering-driven outfit. We've delivered this project exceptionally in really trying times, and we've adopted some of the latest technology that you can, renewables from the outset. Our sustainability initiatives, we've issued our 2 sustainability reports over the last 2 years, and it's got a fantastic story to tell in how we approach things, how this business is setting itself up for a long future, and Coburn being that cornerstone asset that's going to underpin this business for many decades to come. that we can launch from and move into our growth projects. So thank you very much for your support, and look forward to catching up with others after this. Appreciate it.